Hi there! Thank you for all the encouraging support that I have received since I published the first video. If this is the first time you see me, my name is Kevin and I'm a licensed financial planner. Now I have got a question from someone asking me if this is a good time to invest into banking stocks since it is cheap now. While this is not a video to tell you what stock to buy or not to buy, or whether or not you should invest in stock at all, I'm doing this video to explain to you what you need to know if you have the same question. Buying a stock is like buying a part of a company. You are enjoying the growth of the company as well as the failure of the same company. That makes you a shareholder. You share the success and you also share the failure. Banks churn out loan, be it commercial or retail. Banks makes it profit through the spread between borrowing costs and lending income. If they pay you 3% interest when you place your money into your FD and then charge you 4% when you borrow money from them, the spread is 1%. As you may have seen, most central banks around the world is cutting its interest rate to low rate or near zero rate in order to spur its economy. In this aspect, banks' profit will be under pressure due to compression in their interest fee income. Another aspect all the banks may face or worry is higher non-performing loans, NPL, especially if they are not prudent in assessing creditworthiness of its borrower when they approve those loans. NPL happens when you are supposed to pay back your loan, but for whatever reason, you suddenly cannot do so. When you are buying a public listed company, you may gauge the performance of its management through their financial reports, which they are required to publish quarterly as required by the regulators, so that its shareholder can make an informed decision whether to sell, to hold, or to buy more. Therefore, you need to spend your time and you got to have financial knowledge to understand the content of these financial reports and to attend their annual general meeting so that you can ask questions if you are in doubt. There are asset managers or fund managers that covers research on banking stocks daily, which may give them a more accurate views on the health of every bank. As a licensed financial planner, I will leave this task to these fund managers via investing in their unit trust funds. They will decide to invest or underweight this sector. I just choose which fund managers that performs consistently above its market benchmark return over the medium term. If you say that it is cheap now, my question to you is, how do you define cheap? Cheap is a relative thing. You may find something cheap, but the other person may tell you that it is not cheap. Cheap in looking at share price drop alone may not be cheap. To help you decide if a stock is cheap or expensive, there are many data you should look at, such as price earning or PE ratio against its peers and across different sectors, understanding its NPL, and etc., which may be extremely time consuming for the man on the street. But if you have all the time doing research on these banks, by all means, feel free to stock pick and DIY. Behind potential reward from every investment we make, there is always a potential risk. So I think it's important that we diversify the risk so that we can sleep better at night after making the investment. Don't you think so? Since you are thinking of investing, why not invest with a lower risk? You can do so by diversifying your investment to different sectors that are as essential as banking business. For example, energy, telecommunication, manufacturing, healthcare, data. When you do not place all your eggs in the same basket, you already made a better investment decision. However, buying into multiple stocks require a few things. You need time to research and study, and you need a much bigger capital. If you want to invest in stocks that are really undervalued, you may need a lot of time to do a very comprehensive research. And by the time you are finished with a perfect research, you may have already missed the boat. If you are concerned that you do not have this much of capital or time to go through all the annual reports or do all the research, then you can invest through investments such as unit trust funds or exchange traded funds, which will help you to put your eggs into different baskets while you outsource the research and management of the investment to asset management company. This will allow you to just focus on what is important to you. Things like your work, your family, your hobby, doing things that you like with all those time you have. After all, we only live once and life is not a rehearsal. I hope that you find this useful. If you know anyone that can benefit from this, you may share it with them. I also hope that we can connect more in the near future. Take care. Bye.